Welcome, friends. In this series of technical analysis, today we will discuss about candlestick in some depth. So, for this, let us start with one big assumption. History repeats itself. So, how it is correct? This assumption have something from background, or really this is simply in air. Okay. So, for this understanding, for this assumption, let us see some patterns, some history. Suppose, as a factor one, we are considering if from last 4 days, market is falling day by day. On fifth day, what we see is that market is not falling so much. Market is trending in a narrow band. On sixth day, what we see, market reverses and started in an upward journey. If we see this pattern repeatedly happening in different stocks in different time frame, so we can deduce history tends to repeat itself. Based on these assumptions, or this big assumption, what we see, there are different forms, different patterns happens, and then different type of results produces gets. So there are some candles which in itself have a reversal capacity, we can say, and from that, if that patterns forms, that candlestick form, next day we see a reversal and upward journey. If from bearish started, then upward journey, or maybe from upward, then bearish journey will start. Some candlestick in combination, they give some leading indication. In some places, it was observed that in combination of three candlesticks, they give leading indication, and based on that, future trading can happen. So, what are those? In single candlestick pattern, we will learn for followings. The most important is Mara Boju. We will deep down in detail for Maraboju pattern. Again, there are two types, bullish Maraboju, bearish Maraboju, how it works. Then another coming, doji, different types of dojis, spinning tops, different type of spinning tops, again we'll discuss. Then paper umbrella, and under paper umbrella, we'll discuss about hammer, hanging man, shooting stars. In multiple candlestick pattern, we will discuss about engulfing pattern, bullish engulfing and bearish engulfing. Again, this harami pattern comes, bullish harami, bearish harami, we will discuss in detail. Then we'll discuss about piercing pattern, then dark cloud cover, morning star, evening star, different types of patterns. We'll discuss session by session and have in-depth analysis and try to understand psychology behind forming of those patterns, those candlesticks, and how we can benefit from this information. So there are some basic assumptions for formation of this strength. First is buy strength and sell weakness. If we see market is falling, then there is a special formation happen, say this hammer pattern, and then market tends to in upward journey. So we can, if we see this green candle forming, then we can take trade and we can get benefit. If reversal happens after a uptrend, we can sell and then get benefited. So first assumption is buy strength and sell weaknesses. Of course, we will deep dive for this in future sessions. Then next one is be flexible with patterns, quantify and verify. We should do paper trading before jumping for any conclusion, simply based on theoretical knowledge, simply based on bookish knowledge. We should be flexible for patterns. Any pattern is not 100% correct. There is possibility of 65 to 75% only in coming in our favor. Of course, there are some indicator oscillators. By use of that, we can enhance our probability. Definitely, we will discuss about those indicators, oscillators also, but in future sessions. Look for prior trend. We must look for prior trend, see how it is happening. If you are looking at a bullish pattern, the prior trend should be bearish. And likewise, if you are looking for a bearish trend or bearish pattern, definitely there should be uptrend before. So we have to see in context and we will discuss in detail for all those things in detail in future sessions. So what are the key takeaways from these small discussions? History tends to repeat itself. Candlestick patterns can be broken down into single and multiple candlestick patterns. Again, under multiple candlesticks, these two candlestick formation coming and three candlestick formations coming. Another assumption, another takeaway is there are three important assumptions specific to candlestick patterns: buy strength and sell weakness, be flexible, quantify and verify, look for a prior trend. In our next session, we will discuss about the first one, this Marabojo pattern in great detail with example, and definitely we will learn something good there. If you like this video, please like and share, and don't forget to subscribe to this channel. If you have any comment or any suggestion, please write down in comment. Definitely, we will revert back to those comments. Thank you. Bye bye.